Amazon recently reported earnings and their stock is down a bit. Let's see if buying the stock at today's price could make sense. Let's look at the numbers first. They made a staggering revenue of $716 billion in the last year, with a net income of $77 billion, which gives them a profit margin of around 10.8%. And they're currently sitting at $210 a share, which gives them a P of 29, which is still on the expensive side. But in order to evaluate whether or not buying the stock at this price could make sense, let's look at two different cases. First off, a bear case, going for a projection of 5 years. And going out for their revenue growth isn't the easiest. They're currently heavily reinvesting, especially to further grow their AWS business and get into AI data centers and such. So it's a bit difficult to assume how a bear case revenue for them goes. But I took what analysts are expecting and went a bit lower than that. So I gave them an 8% revenue growth for now and a more profit margin reduction, assuming that the competition in those spaces rise and that it isn't as profitable, especially considering the next 5 years. And their share count has been going up a little bit in the last couple of years. So let's just assume that this continues in this bear case. And giving it a P is a bit difficult. I think Amazon has always been a very premium company, so let's give them a P of 23. And this would take the stock price to $194 a share, which above today's price would be a reduction of 1.58% annualized. So let's look at a bull case in comparison, same 5 years, but this time a much higher revenue of 13%. This would 1.84 times their future revenue in those 5 years. So that is pretty staggering growth for such a big company, especially. And an increasing profit margin for a bull case to around 12.5% and a bit of a smaller share count increase. And I think, okay, let's go with a P of 30 for such a staggering amount of growth. That is also what they're currently selling right now, and the stock has been down a bit. So I think if they hit their best possible outlook numbers, then I think they would probably be sitting around a P of 30, maybe even higher. So this would take the stock price to a more promising $439, which above today's price would mean a 15.87% annualized return. And if we combine these two cases, this would take the stock price to $316, which would give it an 8.53% annualized return, being the average of those two cases. So the stock actually is potentially coming close to a price where I would maybe even buy it. I currently don't own Amazon because it's always been more on the expensive side, and it is a slow and steady compounder, but I wasn't never really satisfied with the stock price. But right now, if it slips down even further, then maybe I might actually even start a position on there, because it is getting to a place where it might hit a margin of safety that makes sense. But those are just my opinions. I would be really interesting what you guys think about this company. Let me down in the comments, and I will see you next one.